first time here, this channel is dedicated to helping you understand the market and trade with confidence. I have been trading for over 17 years, trained thousands of traders across the globe, and here we focus on real market analysis, practical strategies, and live trading sessions that help you stay ahead of the market. In today's video, I'm going to break down gold markets analysis and show you exactly what I'm seeing in the market as we start the trading session. We'll go through the key market structures, important SMC concept, clear to wave outlook, and the high probability zones that drive the next move. So make sure you watch this video till the end, because this knowledge can significantly improve how you understand the market. Without further ado, let's dive in. In our last video, I told you guys that gold is actually doing a 5-wave with 1, with 2, with 3, with 4, and with 5. And indeed, gold did the 5-wave. But what happened after the 5-wave? Actually, was expecting that it's going to go a little bit higher, but that did not happen. So it did what we call the truncation in wave 5. All right, so gold actually truncated. It didn't break the top, and I think we saw that in the SMC. And I told you guys in SMC, probably this is where we can actually do a sell. All right, good. So this is the reason why we actually do a blend of the two. All right, yeah. Now let's get into the action. So gold actually did exactly what I said. Right from this spot, gold did a move all the way to the upside in 5-wave. Now it did the sell as predicted. Now we are at a crossroad, right, or at a critical point. If you watch, gold has now broken below this structure, this trend line. Gold has broken below it. Okay, and basic chart patterns will tell you that once we have a break, we would have a retest. So we call it a break and then a retest. All right, so we broke the trend line, and now we have the retest. The retest actually played out beautifully, no questions asked. But that also puts us in 2 phases, right? And I'm going to explain that. Now let's move into candlesticks so that you can see the candles, and then you would actually see what really is happening. So let's move into candlesticks. So you can see we did a break. We did a break right there. So this was the break and then the retest, and then we start to drop. All right, very simple stuff right there. Now let's get into it. So this is the break, and we can see in here, we can see that price actually did a 3-wave. 1, 2, and 3. We can also see that there's another 3, 1, 2, and 3. This gives us a structure called a running flat or expanded flat. I can see in the comment sections right now, somebody is saying, "Great work, boss. Hi, doc. I hope we catch lots of trades today." Yeah, sure. All right. So this is what is happening. This is a 3, and possible 5 should come. 3, 3, 5. Since we broke this low, okay, then we should have a running flat or expanded flat. And this is how a running flat looks like. A 3, and then a 5. Okay, so what will happen is that structure would not break the top. It won't break this top. All right, this is a running flat. Then we can also have an expanded flat, a 3, then a 5. Breaks the top, then drops. All right. So this is with A, this is with B, and this is with C. Yeah, good morning. This is with A, this is with B, and this is with C. Okay, so this is what is happening in here, right? We would explain the other concepts, what is possible to happen in SMC as well, right? So now it's either we would sell from here or we will sell above it, probably from here or probably from here, one of them. All right, so we are going to sell at these two places if price pushes all the way into that area and drop, or price pushes, break it, and drop. Now we have seen what is setting up the setup. We have seen that very clean setup, right? We have seen that. So these are the setups that is on the table right now. So what are we going to do? If you watch carefully also, you are going to see something interesting. So I want to show you one more thing. So let's bring out the oscillators. So we are going to bring out the oscillators, okay? So we have these two oscillators right here. And watch what is happening. You can see from here all the way to the downside. And you can also see from here all the way to the upside. It still even continues. All right. And what is happening? This is giving us what we call divergence. So this is a regular divergence, right? So we have the divergence right here. And that is what forced this move to the upside. We spotted that in SMC. Okay. So now what are we going to do? What are we going to do? Okay, what are we going to do? We are going to position in one of these areas. Either you positioned for the buy all the way to the upside, which is very, very risky. So you don't need to do that. You don't need to do that. You will need to focus, or we need to position in only the sell directions, right? That's basically it. If you are going to position in the buy direction, it's very, very risky, too risky. So that can actually hurt you. Okay, yeah. So you always position in the trend direction, as the saying, the trend is your friend. Okay, yeah. So you always need to position in the trend direction, not the other way around. Right? Perfect. So this is basically it. Now this price, we are expecting that it should make this move. It should make this move. Okay, that's basically it. It should make this move. So that's basically it. Price should move all the way. It should move all the way to this end drop. All right, that's basically it. This is what we are expecting. We are expecting that the price will do this. Okay, now that we have this idea, or we have this concept in mind, let's also look at the next things. Let's also look at the next things. What are the next things? We can also see what is happening inside here. Let's get into the SMC. So we are going to get into the SMC. So in the SMC, we start from the 15-minute time frame. Okay, so I told my people that, hey, gold has done this. This is what we call minor inducement. Okay, so if there's a minor inducement, then it means that we are either going to trade at EPOI, which is here, and because it is under the okay, it's an EPY. So we're either going to trade inside the EPY, or no, it's an XPY. Sorry, it's an XPY. It's not an EPY. So it's either we are going to trade inside this XPY, or we're going to trade inside this XPY. Okay, this is an internal XPY, XPY1, so I have to remove the 2 rather. Yeah, XPY1. So this is internal, right? This is an internal XPY. Okay, so what is going to happen? Price would tap into this XPY1, which is the major structure, the green structure. We spoke about this the last time. So price is going to tap into it, and price did. So now we're expecting the reaction, and what can happen inside here? So now price can either trade, price can either trade from this EPY, this one. So price can either trade from this EPY, okay, and we got the same idea from the Elliott wave, right? Or price will be trading on the XPY, which is here. So these are the 2 areas that we need to keep our eyes locked on. If today is your first time, please don't forget to like, comment, and subscribe, and hit that bell notification so anytime I come live, you will be notified immediately, right? And it's a free thing to do, to share the link to family and friends. Let's continue. Okay, so this is basically it, right? So now it means that let me put this XPY. It means that we need to position inside this area, or we position inside that area for the sales. So if we want to sell, these are the areas that we can focus in and then focus on, and then we will be taking our sell positions. We cannot do sell around any other areas, but around these specific zones. Okay, these specific zones. Let's get into the 5 minutes of the SMC. We are going to get into the 5 minutes. And I posted this, that was yesterday. I posted this one yesterday. I posted this one in the middle of the night. That was yesterday, I think, in the evening. And this one in the dawn. And price all respected every single thing. This giving a very cool sell trade. Nice one. This one also give another sell cool trade. Nice one. This also sell trade. Nice one. And the reason why we keep catching most of these things is because of our powerful indicator. All right. So our indicator actually helps us to see or filter out which areas we can actually be positioning. Okay. We can actually be positioning. If you watch this, you are going to see. In fact, let's go to the 5 minutes. 1 minute after. Yeah. Good. So look at what is happening. You can see how beautiful this looks like. Sell right there, sell right there, sell right there, sell, and even sell. Right? So the indicator makes it so easy and simple for you to make all your trades. It makes it so easy, simple for you to make all the trades. You don't need to stress yourself around anything, right? You just need to wait, and then you strike. Wait and strike. Wait and strike. Okay? So today, all we are waiting for is price getting into the EPY or into the XPY. These 2 areas are where we will be interested in making a kind of sell. All right. There is what we also call the double breakout, and in this case we have a double breakout here. That is why, but this looks like a risk trade. Doc, please, how can I get the indicator? Okay, so you can get the indicator from our bot. All right, our bot on Telegram. So once you go to the bot, you just look at it. Self-way indicator, And to get our bot is at MolarGold X underscore bot. MolarGold X underscore bot. You can help me write it in the comment section as well. MolarGold X underscore bot. All right. You chat the bot and then you're going to get access to the indicator. All right. So let's continue. So we have something we call the double breakout. In fact, let me show you guys from the journal. So I'm going to show you that double breakout thing from the journal. Okay, so let me bring out the journal. So bringing out the journal, and we are going to look at double breakout. So this is how the double breakout looks like. In fact, this one is for the sellers. So you can see we have a double breakout. So this is what we call a double breakout. All right. So once you have a double breakout, you can actually trade. Is one of the most powerful setups. Powerful setups that we actually trades from XPY, either XPY1 or XPY2, very powerful. And then double breakout, they are also very powerful. These are trading models. You can see inside the journal we have different trading models. We have GPY, we have DPY, we have EPY, XPY continuation, XPY reversal, HFT bounce, double breakout, handover or handoff, TF, and then XPY. So we have different models. We trade different models. So as a trader, is perfect or good for a beginner trader less than 3 months. Yeah, you can actually use the indicator. Even when you start trading today, you can start using the indicator. All right, it's very simple to use, very simple to use. You just need to know how to click buy and click sell. And then the second thing is we'll show you which trade you need to pick and which ones you don't need to pick. That's all. And in less than 15 minutes, you should be able to use the indicator perfectly. Right. If today is your first time, please don't forget to like, comment, subscribe, and hit that bell notification. So anytime I come live, you will be notified immediately. And also, don't forget to send the links to family and friends. Right. Share the links to family and friends. It's a free thing to do, and once you do that, it will help us, motivate us to even do more. Okay, let's get into it. So this setup is a double breakout setup, right? But I'm not looking at the double breakout. Like I told you, we can have a running flat, okay, running flat, and I've already stated that here, running flat. Running flat means that it will not break the top. We do not know where it will reverse, but it will not break this top, and then it start going to the downside. Okay, we do not know where. It can be at 50, it can be at 61.8, it can be at 78. We don't know. It can just drop and go. All right, and so this area can be that, right? Yeah, so guys, that's what is going to happen. We have stated every single thing. We've stated every single thing. So the running flats can happen, expanded flats can happen. One of them, all right, one of them can happen. Either this one or that one can happen. Whichever one that happens is fine. Okay, whichever one that happens, it can happen, and probably we just push probably here and then we sell. It can happen. We can push, break it, sell. It can happen. Whichever one that happens, it's the sell, right? But trying to take the buy, that is a bit risky. And yes, you can take the risk as well. Okay, you can take the risk. I've shown you right from here. This is it. I posted that was yesterday about that, and that actually mitigating the XPY1, right? XPY1, because now we are out of the green degree. So that gives us that XPY. Okay, that gives us the XPY. So green degree right here, and that's it So we have XPY1. And because of that, price can actually start going to the upside. But what we have seen so far is telling us that no, price is likely or more likely to go to the downside. So we should be looking forward for either of these moves to the downside, right? And I've shown you from the 5 minutes to as well. So guys, let's keep our eyes on the chart and don't rush to take a trade. Some of you like rushing, you think, oh, yeah, the trade is just going, it's going, and then you miss it. That is the reason why you need to journal your stuff. You need a journal to actually help you. Okay, you need a journal to actually help you to know your psychology, to know everything, probably everything about you yourself, right? You need to do that. Okay, that helps you to understand how trading really works. Trading is very simple. A lot of you, your problem is all about what's the name, discipline. You are not disciplined enough. You don't have a proper structured strategy, and because of that you just trade anything and anyhow, and that makes you lose money. Okay, yeah, you can join also our new and upcoming sniper entry course. You can join and then you learn the proper way of trading, or you learn the proper ways of timing the market and getting ahead of everyone. Okay, guys, if today is your first time, please don't forget to like, comment, and subscribe, and hit that bell notification so anytime I come live, you will be notified immediately. All right, good. Guys, psychology is more important. Psychology is more important in trading than anything else. So you protect your psychology. Craig says, good morning, Doc. Good morning, Craig. So psychology is more important in trading. It's very, very important. You need to protect your psychology. You don't need to rush into the market so that you will destroy your psychology. Okay, you go into the market, you hit the market at the right spot, and then you start making profits instantly. You don't just jump into the market because okay, it's just going to go. No, you don't do that. All right. So patience is more important than clicking a buy or a sell. Is more important. Very, very. Those of you who have stayed with me, I'm sure by now, yeah. Source says patience, oh doc. Yeah. Those of you who have stayed with me for some time, I think by now you have learned to be more patient. Okay, you've learned to be more patient, and it's good. It's good for you to be patient. You have to be very, 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 very patient in the market. Very, very. You have to be. You don't need to rush the market. You just have to be patient. Remember, this setup or this trade is going to be a very big one, and you can't miss it. Okay, it's going to be a very, very big one. Like I said, it may come here, and that is the perfect way. Once it comes here, we are going all the way into these levels. Okay, so you cannot miss this big move. This is a very big move. It can go even way beyond these levels, right? Because that is going to go, that is the wave 3. Wave 3 is the most powerful wave. They move very fast, right? Wave 3 is the most powerful wave. They move very, very fast. So let's be cautious. Let's be patient. You are going to get a big move. You may miss it. Okay, why am I saying you may miss it? Because of this double breakout I spoke about. Because of that, so this double breakout can be starting and price can be going. I've seen my indicator pointing the downside. It means that the sell is going to start. Da Costa says, good afternoon, Doc. Good afternoon, Da Costa. All right, so guys, interesting stuff happening in gold. All right, interesting, very, very interesting. I don't want to trade the double breakout. I don't want to trade that, but it's one of the most powerful setups that we have. Usually it scores around in fact, let's do the scoring. I'm going to do the scoring right now. In fact, let's do the scoring together. So we have bearish double breakout. We have bearish, and the setup is on the 5 minutes. Okay, so we have gold double breakout. Perfect. The POI that we are looking at currently is a GPOI. Confluence factors, valid OB. Let me check from my left side. So this one you can't have it because it's on my left side. You can't see that. Okay, yeah. Sometimes I just show you some of the things so that you would also be able to get your own stuff. Okay, yeah. So I just show you so that you'll be able to see how we get that, and that is 14 to 15. Yeah, so it's good. Let's see what is here. Let's see what is here. Okay, a simple pivot, and signal strength is strong with an arrow. Oh, strong with an arrow. Okay, so I need to go add that quickly to the double breakout. So let me add that quickly. Double breakout, strong with an arrow. So let's add that inside. Signal strength strong with an arrow. It means that we have to start all over. Okay, so we will start all over again. So double breakout, everything is the same. GPOI, confluence, valid OB, 10 to 15 single, strong with an arrow. Structure is BOS, HFT is a direct. Home base is on 1 minute and 5 minutes. There is no divergence in here. So this is scoring a B setup, right? There's no divergence in here. So if we had some divergence, let's check for divergence as well. So we are going to check for divergence. Usually when you are on the time frame you want to pick the trade, what is going to happen is that you have to go down so that you can see the divergence clean or clear, right? So instead you would go down to check for the divergence. You cannot be on the same time frame and then you look for the divergence. You probably won't have that high eyes to see. Okay, especially new trader, you would not be able to see that. But OGs that have been trading for a very long time can spot that. Okay, they can spot that without coming to that low. Okay, yeah, so that's basically it. Let's see, there is no divergence in here, or there is a small divergence. This is the divergence. It's very small, very small, regular divergence. Okay, you can see the divergence, very small, very small. So that is type A, right? Type A divergence. Let me see that. Where is the okay? So type A, where is the okay, so type A divergence right there, right? So we can select the divergence now, and that is still giving us the same thing it did. Okay, yeah, this is giving us the same thing it did. So there's a B plus or a B setup, and it says we should risk 1.5% of the portfolio. All right, so that's it. It means that this is a very good setup and price can start going to the downside immediately. Right, perfect. Guys, I think we've done enough, so we'll be calling it a day. Okay, if you found this video very helpful, make sure you like the video, subscribe to the channel, and turn on post notifications so you never miss our market breakdowns and live trading sessions. Also remember, the real analysis and trading opportunities are shared during our live sessions, so make sure you join us regularly. Thanks for watching. Keep learning, stay disciplined, and I will see you in the next one. Bye for now, guys.